This Dangote company could 2x your money in the Nigerian stock market. And I'm not joking. I'm not trying to promise another bogus return without backing it up with data. And as I speak to you right now, I'm already up by 59% on this stock. Now, if we had waited for financial statements, I think we would have missed this 59% rally. So I want to show you how I spotted this early entry right at the bottom before it spiked. And as I speak, this stock will most likely be doing another 50% or, if possible, 100% in the market. And you will see why I said so. Now, this is not your regular stock pick. I want to show you how to be ahead of the market, how to probably see beyond the financial statements. If you pay attention to financial statements alone, you most likely be missing an opportunity. There is something I've been saying on this channel, which I want to reemphasize, and that is the reason this particular stock is up by 59% on my portfolio, and why I think it might even deliver another 59% to make it 100%. And I will show you example of a similar stock that had done over 100% in our community. So before I continue, let's quickly look at a disclaimer. The ideas shared in this video are based on my personal research and calculations. Kindly do your due diligence before you invest in the company stock. Now, also know that the stock market comes with a lot of risk due to uncertainties, and always vet my recommendation based on your risk profile. Now, pay attention. This is not a video you want to rush. When it comes to money, you have to be very, very careful. You need to carry out proper due diligence. For some of you that are always coming to my channel telling me my videos are long, my videos are not meant for you. My video is not for everybody. My videos are for people who are really, really serious about investing in Nigerian stock, trading Nigerian stock using data-backed research. So if you come here with the mind of a Ponzi scheme, thinking that I'll just tell you to go and buy stock A, stock B, without showing data, without showing working, then this might not be the kind of channel you want to be subscribed to. But if you're here because you have worked for your money, if you're here because you have used your sweat to make that money and you don't want to just throw it around, you want to be sure that you are investing in the right company, you want to be sure that you are buying the right stock as you build your portfolio in the market, then take your time, relax, and then watch how I'm going to share certain insights with you, especially when it comes to getting in early in the market. So why am I bullish? Why I am bullish? Why am I bullish on this company stock? Let me share a story. Early this year, January to February, I told members of my private community that heavyweight big cap stocks will lead the NGS game. I said so. Let me even prove that to you. You sure before I prove that, let's finish this section. I told them that heavyweight stocks will lead NGS rally. And I even mentioned one of the stocks that is prime for massive capital appreciation, one set of stocks, sorry, that is prime for massive capital appreciation, and that's the Dangote stock. I told them that Dangote stocks are going to blast higher. They're going to hit record high because a lot of Dangote stocks are actually heavyweight companies. Let me show you that right up. Now, this is it here. And that was what was that? That was February, yes. I first posted it in my WhatsApp group and then I then shared it right here. This is it, February, 19th of February. Two reasons to buy this beating down G30 stocks before recovery. So at that period, I recommended Dangote Sugar. If you look at Dangote Sugar in February, it was a no-no. I'm not sure any reasonable person, yes, let me use the word reasonable, any reasonable person, either as an investor or a trader, would want to buy Dangote stock because Dangote stock was bleeding. Dangote stock was a no-go area in February. But here's what I did. The direction of the markets in 2025, here I said the direction of the market in 2025 largely depends on high cap heavyweight companies. And it's becoming obvious that we could see Dangote owned stocks rank among market leaders, where this is still an early call, so due diligence is highly advised. You can see that was early this year, January, February. I told them that heavyweight companies would lead the market rally. And that means I was actually bullish on Nigerian stock from early this year. And I also mentioned the fact that Dangote stocks will do well. That is first slide. Let's move to the second one. What was my catalyst? Pay attention. This is where the education is. I don't just tell people go and buy stock A and stock B. It's important we understand why. It is in that why that you get to learn so that you can apply it on similar stock. I've learned not to give people fish, rather teach them how to fish. If you read most of my recommendations on Glowfolio platform, you see that they are more of education, learning, teaching you what I do. And if you pay attention, you will see the same pattern. Now, I asked what was my catalyst. I spotted two signals. Pay attention. Two signals. The first was moderating yield in fixed income markets. I saw how yield was moderating between November. If you are joined our portfolio community where I shared the trend in fixed income yield, especially 364-day treasury bill from 2019, from November, how it dropped from 29%. Yes, it peaked at 29% in November. Then look at the trend from November till date. You will see that yield in the fixed income market had been dropping gradually, been moderating gradually. Now, I saw that and I knew it would support lower finance costs. One of the major reasons Dangote stock was beaten down is higher finance costs. Go check Dangote results in 2024, Q1, Q2, Q3. Most of the dip were coming from higher finance costs. So one, I saw this moderating yield in the fixed income market, so which means it will most likely rub off on the finance cost of Dangote stocks. And then secondly, I saw how Dangote was investing in backward integrations to cushion the effects of FX. FX was a major problem for Dangote stock in 2024. I think from 2023 to 2024, a lot of Dangote stocks suffered FX losses, somewhere as a result of imports, exchange rates affecting cost of import. So because of that, cost of sales were going up. So there were a lot of reasons behind that FX surge. And I think because they probably want to stay away from, or sorry, they want to build a business that is not totally dependent on FX. That's why Dangote invested, is considering backward integration. You can go online to check. There's so many news around backward integration on Dangote cement. Let me see if I can show you one of them. Dangote sugar backward integration. So you will see one here. So yes, look at one here. Dangote Sugar Refinery plans expansion, emphasizes backward integration. This is it here. You will even see on that was 30th of April 2024. You see Dangote Sugar sees backward integration as best option because of the whole issue FX loss. Backward integration is when you try to buy up your supply chain or you try to own the supply chain. Number one, you buy large expanse of land, so you are investing in your supply chain so you don't rely on imports again. So let's continue. So I saw these two trends. First one was moderating yield. The second was and moderating yield, and I saw how Dangote was investing in backward integration. Now, another point which was very important for me was that I also spotted insider footprints. Second was insider footprint across Dangote stocks. So I didn't just tell them that Dangote stocks are going to recover this year. Dangote stocks are going to lead market gain this year because they are part of heavyweight stock, obviously. But I saw an insider footprint across all Dangote stocks, meaning when I carried out technical analysis of all Dangote stocks, from Dangote Sugar to Dangote Cement to NASCON, I saw the same pattern, the same pattern. So Dangote stocks are showing a block trade. You can see, I think second was insider footprint across Dangote stocks, showing block trade. When you talk of block trade is like when you buy in large quantity and institutional accumulation above 8 to 10 month average. That means the average or the quantity of Dangote stocks traded between January to February within that period were unusually above 8 to 10 months average. But this is happening when the company was suffering. This is happening when the fundamentals were not okay. Do you understand? So, and then let's look at the fundamental. Even though fundamentals were not good, if you look at the traditional checks based on the things you watch out for, to determine whether a company is a buy. I'm not sure you would even want to buy Dangote Sugar or maybe any of them because number one, they were dropping, the stocks were crashing, and then fundamentals were not even supporting the reversal. Now, even though the fundamentals were not good, the macro events were a pointer that we could see improved financials going forward. After all, revenue from sales and exports continue to show improved and solid top line. What's your takeaway right here? Sometimes, if you pay attention, if you look at fundamentals only, you will miss the opportunity. Fundamentals have been a lagging indicator right from day one. Many of the reasons why I don't put all my heads on fundamental is because the data presented are largely historical. If you want fundamentals to make sense to you, you must be able to connect to macro events driving that performance, either to the up or downside. Now, let's now look at Dangote Sugar. Now, before I talk about Dangote Sugar, which is the main stock, one, Dangote Cement, NASCON, and Dangote Sugar are the three stocks I had already pointed out early this year. Before we move to Dangote Sugar, let me show you NASCON. Let me show you NASCON. And then you look at NASCON, then compare with Dangote Sugar. So let's quickly look for that post on NASCON where I talked about demand driving the stock. So let's go back a little bit. Yes, in January, I recommended NASCON, right? So NASCON was also part of the Dangote stocks I referred to. This is NASCON right here. Now, what was my entry price on NASCON? My entry price on NASCON was 38 to 40 naira. So let's look at NASCON on charts. 38 to 40 naira was within this region. Now, pay attention to that region. This was a recovery. This was after the stock was beaten down from a high of 74 down to 30. And then when I saw the stock trading around 30, something to 14 naira, I quickly recommended NASCON. Those that join my ETC section will tell you the strategy behind it. So it's not a brainer. Now, where is NASCON today? NASCON is sitting comfortably at 88 naira. A solid 100% return. That's a solid 100% return. And if you look at NASCON within that period, the fundamentals were nothing to write home about. Go and check the fundamentals when I recommended it. It was nothing to write home about. But guess what? I saw a macro event that would drive recovery. I saw a macro event that was validated by technical analysis, which is volume. For volume drivers, for institutions to start accumulating a company stock, they must have seen something. Institutions don't buy. These guys are coming with the money that move the market. They can't just channel their money into different stocks without they spend money on data and analysis. So sometimes the research you carry out may not be necessary. All you just need is to follow the footprint of the money. That's how to follow the money in the market. Follow the footprint. So when I hear people talk about follow the money, it's not about you coming online to share your opinion. No, follow the money means you are telling us what the big money drivers are doing, what the institutional investors are doing. That's how we follow the money because they have done the job for you. Don't try to be them. Don't try to argue with them. Ask yourself, what is the big money doing on this stock? Are they buying or selling? Then you do what they are doing. That's the shortest way to profit from the market. So I followed the money. I saw the institutional accumulation on these stocks from NASCON to Dangote Cement and Dangote Sugar. So it was easier for me to know what was going to happen on this company's stock. Look at where NASCON is today. Now, let's now complete our write-up on Dangote Sugar. Dangote Sugar, around that period, had not released any impressive financials. Because the period I recommended Dangote Sugar, it was around, I think, let me go back to that post. It was around February. Yes, I think I showed it earlier on. February. Around February, no Q1 result was out. It was nothing to show for it. Nothing. Nothing to show for it. This is it here. February, no Q1 result was out. So there was nothing to show that Dangote Sugar was a hot buy within that period. But let me show you something as we proceed. Now, let me continue this stuff I wrote. Now, I said the direction of the market in 2023 was largely dependent on high cap stock, blah, 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 blah. Now, in January, NASCON showed up on my watch list before I issued a strong buy recommendation at 38 to 40. You know where it is right now. In February, Dangote Cement passed my check. I dropped a strong buy recommendation. Now, this stock dropped after that. I still bought more. My average entry on Dangote Cement is around 420 something, 430. Because you see that drop, I bought a lot of units at that lower end of the market because there was nothing that had changed. It didn't change my perception. In the market, don't trade price, trade pattern. If you trade price, you'll be confused because price go up and down every day. But if you trade pattern, you will know when to accumulate, even when the stock dips. So when I saw a dip on Dangote Cement, what was I looking for? I was looking for pattern. So my pattern was telling me that this stock is still a strong buy. So even though price was dropping, that was easier for me to accumulate more of that unit. Technically, both stocks start trading at below their key weekly average. I teach this in my ETF ETC class. Climbed above on a strong demand. I saw this. So in our ET section, I usually teach this. Yes. Now, from my check and research, I noticed that the Nigerian stock had traded above my weekly averages in the last 5 to 10 years, and price usually go up, blah blah blah. So here is where it's getting more interesting. Here's another Dangote owned stock that is strongly approaching the weekly average and is likely to close above it, still below as of this update. And that was Dangote Sugar Refinery stock. Now, with this new addition, it implies, I've already recommended Dangote Cement, I've already recommended NASCOM. So, and I said with this new addition, it implies that a bet on Dangote stocks in 2025 may pay off in 12 to 24 months. That's if you are considering medium to long term investing. Remember, I love it more at the bottom, not when they are at the top. Technically, Dangote Sugar has completed my buy setup on daily time frame with today's close of 37 solidly above all my moving averages, an indication that sentiment has not only turned positive, but buyers are gradually mopping up. What was my secret? I know how to follow the money. I didn't talk about fundamentals. I know how to follow the money in the market. In short, let me see if I can spot Dangote Sugar financial statements as at that period, because then they've not released Q1, and I'm not sure. Remember, this was uploaded in March, so we only had Q3 in place. I posted it in February, so as at March, I'm not sure. Um, let me see. Let's go back. Let me go back and show you something. All right, all right. Okay, now look at these results. This was the latest financials when I posted that recommendation. If you look at it here, this was posted in February. And what we have here is you can see the upload. As at February, we don't have this yet because this was uploaded in March, right? So as of February, the latest result was just Q3, which was uploaded in October 2024. So that explains the Q3 I'm showing you right here. Now, when you look at the Q3 results, you will see that 2023, 2024 against 2023. If you look at the results, you see here, look at earnings per share, 960 to 40. Look at it here. Profit for the year. Look at it here, which was even loss for the year. The company made 980 billion in 2023, Q3 2023, and in Q3 2024, it expanded to 40. Can you see? The loss expanded. Profit before tax was 3.9 in 2023, and in Q4, it expanded to 64. So there was no reason. I sounded like I was not making sense. Because why would you tell me to go buy a stock that is already expanding its loss position? It's not even declaring profit at all. Why? What exactly did I see? Remember what I told you before. Financial statements are largely historical. Whatever you are seeing right here was just an historical event. I was looking at a major pointer, and that was the macro event, which I teach in my ETC section. Whenever you look at financial statements, don't look at it hook, line, and sinker and just accept what you see. Look at that indicator that will give you a guide that will tell you what is coming very soon. And you can only find that using macroeconomic indicator. So I looked at the catalyst. Moderating yield told me that Dangote finance costs will be dropping very, very soon. How that Dangote was investing in backward integration, and most importantly, footprint of institutional investors. These guys, they have access to CFOs, they have access to CEOs, they have access to management. So if management is going to take a major decision that would affect the company's financial statement, these are the guys that would see that are privy to such information before it even makes it to mainstream media. So they will now start acting in line with that information. Do you understand? Now you are now tracking what they are doing, which is that insider footprint. Look at it here. You can't miss the footprint of an elephant when you go to the bush to hunt. You can't miss it. So if you want to be a profitable trader in Nigerian stock market, learn to follow the money, not by doing your analysis yourself, which is very important, but most importantly, follow the footprints of these guys. They will tell you, no need for stories. So let's continue with my analysis. So I said at 37, the stock was around above my key averages. The buy signal was clear. And then I still went back to do a historical check. I said the last time I spotted similar pattern was in January 2023 between 16 naira to 7. That was when Dangote showed me the same buy setup. The stock made a solid move to a new high of 16 naira. From 16 to 17 naira to 16 naira, that's over 252% gain in the market. The risk on this stock is that is it fundamental? It is still that if you look at what happened then, based on fundamental, the stock company was still struggling with rising debt, blah blah blah, rising costs, everything was negative. I just showed you the Q3 result of Dangote Cement. But when I added, when I looked at it from an economic perspective, how that rate was moderating, I didn't rush to buy, but I saw how the real money, the big money, were mopping up and accumulating the stock at the bottom. That was what led me into issuing a buy signal on Dangote stock. So even though revenue was also growing, so if a company is suffering maybe rising FX costs, there's still hope. But you see that when the sales is dropping, that's what so Dangote was still posting improved results. So for that 9 month period, sales was still going up, except that it's yet to turn profit and all that. So you can read up this write-up if you're a member of Glowfolio. So, and I said something that as long as the price is above the last low, I remain bullish on Dangote stock in short to medium term. And if the prices rises to 43, 44, we may see a solid long-term move. First reason, I am bullish. I'm bullish on technical setup, while the second is low risk level. So, what was my buy entry on Dangote stock? 37 to 40 naira. 37 to 40 naira. Where was 37 to 40 naira on Dangote stock? Let's look at Dangote sugar stock to explain that. Look at Dangote sugar stock right here. 37 to 40 naira was around this region. This was where we took our entry. Now, if you pay attention to this stock, you will see that I entered right after the stock dropped to a low. You can see a huge drop from here down as a result of the failed merger with the NASCON. After a drop, we saw the stock pick up, demand and supply. So the question is, who was accumulating this stock right from this region? Now, later on, the company released its first quarter results. So let's see if you can look at Dangote first quarter results as we proceed with our analysis. So Dangote released its first quarter results. So let's look at Dangote Sugar first quarter results. And I'm also glad that they've just released their second quarter results, which we're also going to be looking at. So here's the first quarter result of Dangote stock. So what happened then? When was this result released? First quarter result was uploaded on 30th of April. This is it here, April 30th. Now, if you go to our chart, April 30th is around this region. Right here, yes, right here. So you can see that even after the stock went to high as 40, when I recommended it, it dropped. It dropped. I still bought more. So April 30th was around this region. So let's look at the results in that April 30th. So we're looking at the Q1 results of Dangote. Now, look at the Q1 result of Dangote. Now, we saw the whole earnings, blah, 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 blah. But the most important thing I'm interested in is that earnings driver. Look at finance costs. Finance costs dropped from 120 billion down to 27 billion. Look at it here, 120 down. When I saw this here, it gave me my confidence on Dangote stock improved because that thing that had made me to buy that stock, together with the bullish sentiment I spotted on chart, was confirmed right here. 120 billion down to 27 billion. And this helped to narrow Dangote loss from 68.9 to 23. There's a lot to learn here. Sometimes a loss-making company can be a good buy. Everything is not about did it declare profit, did it declare profits. In trading, you focus, you look at growth. In investing, you look at value. So when you are looking at the financial statement of a company as a trader, the big question you should be asking is there any growth? Did you see any growth? Growth means you are comparing what they posted this quarter against previous comparable period. So don't just rush and say, oh, it's a loss, the company is bad, blah, 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 and then you miss an opportunity. There was a growth because the loss narrowed from 68.9 down to 23.6. It's a growth. Because before the company declares profit, it should have probably shown that the losses are going. So this helped to boost the bottom line from 68.9 loss down to 23. Now let's look at the second result, which is Q2 of Dangote. Pay attention to Q2 result of Dangote Sugar. What happened again? Look at the same finance cost. In 2023, let me see. No, this is not the Q2. What am I looking at? Yes, this is the Q1. What result is this? This is Q3, sorry. Let me show you Q2. Yes, this is Q2. Yes. So we've looked at Q1 and we saw how lower finance costs helped to narrow the losses. Now, here is Q2 2024 against 2025. Now, what happened to the first thing I looked at when I saw this result was finance costs. I didn't even look at profits. Now, look at finance costs. Finance costs dropped from 109 in Q2 2024 down to 34. Have you spotted a pattern now? Have you spotted the pattern? Yes, that pattern is reduction in finance costs. The company is reducing its finance cost. In fact, if you go up a little bit, you will see how operating profit shot from 5 billion to 35.3 billion. And in 6 months, it went from 10.3 to 38 billion. Now, when you come down, you will see how this reduction in loss helped to support profit before tax, loss before tax, sorry. You see how it dropped from 109 to 34, the company profit before tax turned positive again from 104 loss incurred to 523. Now look at 6 months from 211 loss incurred down to 22, meaning Dangote is aggressively cutting down its loss position, meaning it's on its way to declare profits. We have already seen a sign at the profit loss before tax level, but we're yet to see it rub off on loss for the period. So if you look at loss for the period, 75 billion down to 623. That's a growth. That's an improvement. And then 144 down. It may not make sense to you. That's your traditional way of checking. But this is how I have looked at financial statements over time that has been able to help me spot growth. First thing, I spotted the catalyst. Second, the catalyst translated into numbers. And then before then, I had already seen accumulations at the bottom of the market, which was why I called the stock at 37 to 40. Look at Dangote stock right here. Where it's sitting at 58. So why am I bullish on this stock going forward? I am bullish on this stock going forward because If the company continues to report reduction in finance costs, then we might see the company turn profit in either third or fourth quarter. And if company turns profit in third or fourth quarter, then sentiment would be largely positive. It's going to make headline. The media is going to pick it. The media will not pick it now because it has not turned profit. If it turns profit, you will see Dangote turn profit. And then the former guys, the guys who are always coming to stock to look for the next big opportunity, will start mopping up the stock. And at that point, you are selling back. And that's why I'm expecting this stock to touch a minimum, at least 82 naira. This stock on improved Q3 and Q4 should rise to 82 naira. So if the stock touches 82 naira, what is 82 naira compared to our entry of 37 to 40 naira? So assuming it touched 80 naira, 80 minus 40, let's assume that our average cost is even 40. I'm not even 37. That's 40 naira. 40 divided by 40 will give you 100%. That's why this stock is hot right now, but we are already in. Why? Because I knew what was coming. So we got in early. Now, when you get in early, don't expect the stock to spike. We still saw a dip. This was February when I recommended Dangote between 30 and 40. The stock still dropped down to 32, and I averaged down more. Like I said, I look at pattern and not price. My pattern were intact. So I mopped up the stock again because I was holding on to two things. One was moderating yield in the fixed income market, which I know will definitely rub off on finance costs, like I showed you on Q1 and Q2. The second, which is the most important of them, was the big money mover. We're already accumulating that stock. So my pattern only shows up when buyers are taking over from sellers. I teach that in my ETC section. My setup in the market is to buy a beaten down stock, a stock that's been beaten down, and then notice movements, change of hands, sellers losing because selling pressure has been exhausted, and then buyers are now coming in to take over. So the question now is, who are the buyers? Who is accumulating the stock on deep? Who is accumulating the stock despite the unimpressive fundamental? This is how to get in early in the market. You must have a contrarian view. You must not follow the popular opinion that only when financial statements are improved. No, this was right how we entered Dangote Sugar at the bottom of the market. And Dangote Sugar has almost the same pattern as NASCOM. Almost the same pattern as NASCOM. Right here. Look at here, dump and they're picking up. If you go to check NASCOM result, here's NASCOM result. NASCOM is yet to declare its Q1 result. It's Q2, sorry. But when you look at Q1 result, it was massive. 3 months 2025 against 3 months 2024. From 1.3 to 7. From 1.3 to 7. And if you look at the finance cost, we also notice a dip, 357 down to 212. So finance costs also helped to boost, even though majority of the rally came from sales. So there's a lot happening in Dangote stock. Look at Dangote Sugar results. Look at Dangote NASCOM. Look at Dangote Cement. They just came up, I think, 2 or 3 days ago. I don't know if I can quickly find that out. So all these point to the fact that Dangote stocks are going to do well in 2025. So did you spot it? Did you get in early? These are the knowledge that I share in the community, and I also share them in our webinar, monthly webinar, getting in early. So this stock for me is like halfway. Even though I know the stock will break out of this, it will definitely break out of this. But first, the 100% rally, I will take my profits and then maybe hold some units more and see what happens after that. Because I know very well that if Dangote Sugar turn profit, the stock will clear 80. So at 80 naira, what are you doing? Are you taking profits of 100%, or you are just looking to enter at the top of the market? This is not how to trade. If you want to be a professional in this market, you must learn to see what others are not seeing. Don't use the media to trade. So this is one Dangote stock that I know could double your money in the market, especially given that they are recording deep on their finance cost, which is also helping to boost their operating profit. Sorry, helping to boost their profit for the period. So right now, the company is still absorbing loss, but at this point, it's reduced to a very large extent. So as it is now, it's 620. Who knows what will come up in Q4? So at the end of the day, maybe in Q3 or Q4, this company might turn profit, but I am very certain, looking like this guy will turn profit at the end of the year, because look at operating profit alone. Operating profit went from, look for 6 months period. Look at it here. In 2024, it was 10.3. In 2025, it's already 38, almost three times. Three times. So if they continue at this pace, the whole of 2024, they reported 12.6. And now operating profit for just Q2 alone, 6 months, is already more than what they reported in a whole year, which is 12.6. Can you see that? So this is the kind of stock I like to buy. Get in early, get in early, get in early in the market. So knowing how to trade like this will give you that additional advantage. Takeaway here is that in Nigerian stock market, stock prices usually go up before breaking news or turnaround results are being released. At least 90% of the time. Sometimes you see a stock blasting higher. You don't know why. You don't know what is happening. But the stock is just going up, going up, going up, going up. The moment you enter, the stock starts dropping. But you don't know why. So the question is, do you know who is driving that market? Do you know who is driving that stock at that moment? So your job as a trader is to learn how to spot institutional footprints, point of interest using price action, because price action will always capture the reversal before the media. Price action will always capture the reversal. When I saw the reversal right here, price action captured this early enough. So entering at 37 to 40, and the stock is already at 58. Yes, I'm sure some people will start following on the stock. It will go up more, there's no doubt, for what I just showed you. At least finance cost alone is a confirmed trend. It's been going down, which will definitely drive their push their loss lower and then probably swing them into profits. But you don't have to buy late. That's the key thing right here. You should have entered early in the markets. This is why I always advise people to join my community. I don't post stocks every day. I don't post stocks every week or every month. Most likely in the month, stocks will come depending on the market. But guess what? When we find stocks to buy, most of the times it's always a hit. If you watch my previous video on sovereign trust, the one I shared before this particular video, the stock has been on full beat back to back. But we're already in. I entered at 1 10 kobo. It's already at 1 17 something kobo. So if you want to catch the hottest stock right now, benefiting from trends, go to glowfollow.com/subscribe. Pick a plan that works for you. We host monthly webinars. Monthly webinars. We are moving to August now. Very soon, we're going to send a notification on when we'll be having our monthly webinar. In this monthly webinar, I take my time to review all the stocks I've recommended, then tell you the ones that are still within the buy range, and then share insights. That's how we've been hosting webinar since January, February, March, April, May, June, July. Now we're looking forward to August. So if you join a community that hosts webinar like this, there's no way you will not learn. There's no way you will not understand the market. So this is not a community where you join and then you start, people will just be posting random stocks. We follow a system-based trading model. And that's what has helped us in the market. If this video makes sense to you, kindly hit the subscription button and turn on notification bell.